Is this the end of a retracement? Or could price go lower? Or is this the market top where price eventually reverses? This is a challenge that all traders face. Professionals, rookies, amateurs, they all face this problem. But what if I told you that professional traders have a quick tool in their arsenal to help them discern between a retracement and a reversal? Would you be keen to know? Well, in this video, I want to show you an accurate way to predict the end of a retracement. It's a mathematical method which I'm going to show you. But don't worry, I promise that it will be simple and won't require complex concepts like binomial theorem or distribution theory. If you can draw a rectangular and shift it around, then you can apply this secret technique that professional traders use. Now, as a teaser, here's a quick snapshot of how it looks. This level here is the level that will determine if the retracement has ended. And you can see that once price broke through the level, price went on to resume its trend. Now, how did I get this level? I will touch on all the juicy details shortly. But for now, please do me a small favor by hitting that thumbs up button and subscribing to the channel. I would really appreciate that, and it helps this channel grow. And of course, when we grow, we are going to allocate more resources to creating valuable videos like this. Anyway, as always, we do a giveaway worth $37 for each new video that we release. And if you wish to participate in our giveaway, then look for an emoji somewhere in this video. You can find the full instructions in the pinned comment down below as well. So before I jump straight into how to predict the end of a retracement, I need to make two very important disclaimers. This technique works for retracements, and the prerequisite for a retracement is that price must be trending. I mean, think about it. How can price retrace if it isn't trending? So please do not apply it in a ranging market. In a ranging market, you should be buying at support and selling at resistance. You shouldn't be trying to predict when the retracement is going to end. As a quick refresher, just so that you are crystal clear and do not take what I say out of context, a market is said to be trending upwards when price is making a series of higher highs and a series of higher lows. And of course, the opposite is true. A market is said to be trending downwards when you see price making a series of lower highs and lower lows. The other disclaimer you need to be aware of is doing this only on the H4 timeframe and above. This technique has a very high chance of producing false signals in the H1 chart or M15 charts. So minimally, you want to apply this to the H4 timeframe and above. This is very important because I have lost money testing this on lower timeframes, and I don't want to cause you to lose money. So please do this on the H4 timeframe and above. Now that I got these two disclaimers clarified, I want to show you how to calculate the distance that the price must break in order to determine if the retracement is over. So right here we have price trending and price starts to retrace down. We can see that there are multiple waves. Price retraces down a little bit, bounces, then retraces down, and so on. What we are interested in is the longest retracement wave of them all. This pointer is very important, so I will repeat myself. We want to focus on the longest retracement wave. So take a rectangular tool and box out the longest retracement. Now sometimes it isn't too obvious which retracement wave is the longest, so we might have to draw multiple boxes and find out which is the longest. In this case, it's rather obvious, and it's this one over here. This will be the length that we use, and we take the box and shift it down to the lowest point. Take a horizontal line and just park it at where the top of the box is. This will be the level that tells us if the retracement is over or not. For the ease of explanation, let's call this the key break level. Now, so long as price doesn't break this key break level, then the retracement isn't over. Price may retrace slightly and then head down further as well. Now, if you see this kind of scenario, then you will need to adjust the box and shift it down to the lowest point. Now, obviously, this way of determining when the retracement is over isn't a holy grail. It frequently works, but it doesn't happen all the time. So you might get a scenario where price breaks the key break level but fails to resume its trend. In this case, we will have a retracement length that is longer than the previous one. Thus, when determining the next key break level, we have to be mindful and use the longest retracement length. So let me walk you through a couple examples more so that you have a clearer idea. So right here we have price trending upwards, but we have a retracement here. And because we want to trade with a trend and ride the existing trend, then we need to wait for the retracement to complete. So we measure the length of each retracement and find that this retracement over here is the longest. So we box this out using a rectangular tool. Now as price drops, we shift the box that we drew down and down until price finally finds a low and starts rebounding. When price finally breaks above our key break level, we can conclude that the retracement is over. Now, a word of caution that this isn't a full trading strategy on its own. It's just a way of determining if the retracement has concluded. So if you want to trade this, you can start applying a trend trading strategy after seeing this. On this channel, I have many trading strategy videos, so pick one. But if you are confused about which to choose, I will leave a link to one of the trend trading strategy videos that I recommend at the top right and at the end screen of this video. But please do not just blindly trade every single break of the key break level. You have to put everything together: the market context, key level, and entry trigger. This key break level only provides you with one element, and you're going to need the other two ingredients to do a complete analysis. So let's walk through another example, this time a bearish scenario, since I haven't shown you a bearish setup yet. So over here we have the dollar CAD, and we can see that it's in a clear downtrend. Price starts retracing and we want to sell high. To do this, we need to know when price is done with its retracement and is ready to resume its downtrend. So we look into each of the retracement lengths to determine which is the longest. And right here, this is the longest. So again, we take the rectangular box and box this retracement. This is the longest retracement length that we will be using. We shift this up to the recent swing high and draw a horizontal line at the bottom of the box. This is our key break level, which tells us when the retracement is done. Now in this case, price breaks it and retests it nicely as resistance. This is one of the most obvious signs that your analysis is right, since the market respects the level that you drew. And that's the entire technique, but here's a very quick summary of the steps involved. Step 1. Determine the longest retracement and box it out. Step 2. Shift the box to the recent swing low or high depending on whether you are bullish or bearish. Step 3. Plot the horizontal level at the top of the box or at the bottom of the box to determine key break level. I'd like you to test this technique and let me know if it works for you. And that's it for this video, so make sure to hit that subscribe button if you have not already done so. As promised, I will leave a link to one of the trend trading strategy videos on the end screen over here. Thanks for watching, I'll catch you in the next one.